Hello traders, welcome to your market update for Friday the 13th of March. And for those of you who are superstitious, I guess it's a long weekend and you'll stay out of the markets. But I don't think you'll be missing out on much, as we don't have a lot of economic data coming out, as you can see, where the Canadian employment change and employment rate are the only things in focus. There could be some trading opportunities there actually if it does come in weak, as the US dollar strength kicked back in the US session last night, and I'll get into some more details there, but there's not much more to talk about in terms of the economic calendar, and we'll have a look at the charts. Before we do, I just wanted to take the opportunity just a quick mention that I will be doing a single video that's free for everybody. Now will be combined of the economic calendar and the charts just on a higher level, as in the very near future, I'm working on it right now, putting together a live tweet service that you'll get all my trades live straight from my trading desk to Twitter, and you'll also get a lot of videos in terms of before every market and webinars of detailed charts and detailed strategies of what I do to make the money, so you can get an understanding and trade alongside me on exactly the type of trades I do and how I trade, and you'll be able to see live on my screen where the orders have been placed and what I potentially am looking to do. You'll also see the current weekly pips. This is an EA I've got made up, and I will pass it on to those who become subscribers, where it'll tally up your weekly pips and your net currency profit, and also an indicator here that I've made that just lets you know what the spread is at all times. Anyway, I'll talk more on that later, and I'll be putting out a video, but let's get into the charts. As I mentioned, we'll have a quick look at the US versus the CAD. We did see some profit taking yesterday, as I mentioned in the European or early Asian session. Actually, it started where the US dollar was starting to get profit taking coming in, and we've seen a pullback, but that was short-lived, and the market has since bounced. Now, we did have really weak retail sales. It's the third weak report in a row. However, we did get strong jobless claims, and that data helped support it. But ultimately, at the end of the day, the US dollar bulls just come back into play. So the pullback was very short-lived, and it didn't even make a full session between a full 24 hours before we've seen the buyers come back in, and they just took this as an opportunity to buy US dollar long positions in their respective currency pairs at lower levels. Now, it was just a short squeeze, and it flushed out a lot of players in the market, and people are backing in. And that's something that you could look at as well. So obviously, it's showing us that the US dollar bulls are definitely back into play. And we've had a bounce, and we're continuing to trend higher. Now, if the details do come out that the Canadian jobs report and the unemployment rate is weak, well, then we could see this extend through and possibly just poke its head above $1.28, or at least test $1.28 today. So that's something to keep an eye on. And if the report is weak and the US dollar bulls keep in, I have no problem expecting it to continue on higher. So it could be an opportunity. This is a breakout of a pretty big descending triangle here that we've seen a breakout, and I think it's got more to go higher. So there could be a good opportunity to get in at lower levels and get your position staked there. Now, let me have a look at the dollar index for you. If I bring this across and show you that we did have this little pullback in the daily candle yesterday, but it looks like the dollar bulls have got back in, we could see the rally continue. Now, I don't get my hopes up too much, as it is a Friday, and we will look at this in a bit more detail next week, and we could have just a quiet session where the US dollar doesn't do a great deal. But if I go to a 1 hourly chart over the last 5 days, you'll see this pullback did kick in, and then we did see a bounce, and we've got new support established, and now the market's making a run with a little bit of support. We have the MACD crossed the back above zero, and that could indicate some strength entering back into the market, along with the relative strength index crossing 50 as well. So we could continue to see the US dollar strength. Now, we need to note the big 100 number. It's a big round number. It's where it stalled previously. If we get a break above that at some point, that does indicate quite a big psychological level that has been breached, as a big whole round number for the US dollar index. And a US session close above that would be quite a significant sign. Something to keep your eye on. Let me go through the charts just quickly. We have the New Zealand bounced on the back of them. mentioning that they're going to keep interest rates on hold for the foreseeable future. That is quite positive, as the market was really wondering what they were going to do moving forward, and they clearly outlined their intentions that the rates will probably stay where they are for the foreseeable future. So that offered a little bit of support. And now we are trading between two pretty significant support and resistance levels. We have a double bottom here, which if broken will definitely indicate some bearish momentum. And then we had a significant top here, which was once support, then become resistance. We spoke about it and we traded through this period here. Now, where the market goes to from here, it could actually consolidate within this region until we get the next piece of information coming out. So be careful of potential range trading scenario there. Until we get a break of here or a break of here, I'm not really willing to say that we are back into a highly trending market. But if the US dollar bulls do continue to reign, this could just be a overextended pullback, a little bit greater than what would normally expect, and the trend could continue lower here and get back down and test these levels. So we did see the market fail at 74 cents and now trading below. So keep an eye on that. Any break above 74 cents should indicate that the market wants to continue higher. But it's all going to be driven by the fact of the US dollar, and bearing in mind that the New Zealand is now on hold in terms of doing anything with their interest rates. The Australian dollar also had a bounce on the back of a little bit better than expected employment data. It wasn't hugely impressive, but it was somewhat encouraging, to say the least. So we've now seen it fail at 77 cents. It popped its head above, and then it's trading back below, similar to the New Zealand. That's on the back of the US dollar strength kicking in throughout the late US session. And now that we're heading into the end of the Australian session, I think we will see potentially further downside as the US dollar strengthens, and we'll have to wait and see. However, a break above here would definitely indicate that we could possibly be testing this trend line and beyond in the near future, the next resistance level being here. So that would be the next resistance level to the upside. So I'm still bearish on the Australian economy. We all know this. So further downside trading opportunities. This is an interesting one, the Great British Pound. If I go to the daily chart, you'll just see that since we've broken out from this wedge, it's just been all downhill. And as soon as we broke $1.50, I said that was a big major level. It has just continued to fall. We did see a bounce in the US dollar profit-taking scenario I mentioned, and then it just fell away again. Now, what happened was the UK fell, but we did see this rally here also get attributed to better than expected. Well, it's actually the UK trade balance was the best in 14 years, and that's quite impressive, and we had a bounce. But we also had, following that later on in the US session, when we really started to get carried away here on the selling, we had Governor Carney speaking, and he actually jawboned the pound lower by saying that the strength of the pound is actually concerning and it may impact inflation. And that basically, the market grabbed hold of that, meaning that if it does impact inflation, they may not raise rates for a little bit longer. He did follow up that statement in saying that the central bank is consistent overall in its view that they will be gradually raising rates. But the market really said, well, hey, you're not saying when. Sure, you're going to raise rates, but is it even this year? So momentum is really to the downside still, and I think we could see that if the US dollar strength remains into tonight's session and into next week, we can continue lower and possibly even head down towards $1.48. So at some stage, I think the market will close around in here, and the bears are still in control of the pound. A little bit more than what it's actually caught me out by surprise. The fundamentals aren't that bad, but obviously the momentum's on its side. We don't want to fight it. Just trade with the trend and the flow and make money while we can. Just bearing in mind that soon as the Bank of England starts announcing dates for, or indicates at least which quarter they are anticipating their first interest rate rise, we will see a big bounce in the pound. The euro did have a bounce as well, and I think this is just purely from the US dollar taking profit and also the short squeeze in the net short euro positions. And then we've seen it fail. It didn't even get above $1.07, and then we're looking to pull away again. This could be an opportunity just to get your sell orders back in at higher levels and the trend continuing lower as momentum really is to the downside for the Eurozone, and the economy there is definitely not looking any good. And we've seen what Draghi had to say about quantitative easing, and they are full steam ahead, and that's only going to add liquidity and add shorts to the euro dollar. So it could just be an opportunity as well, and keep an eye on the US dollar index there, because that'll add fuel to the fire to further downside. We've spoken about the CAD. Now let's have a look at the JAP. It's very similar to the CAD, and we did have a daily chart here, and it did have a pullback, and then it bounced. It bounced off $1.20.6, and this was a level of resistance in the past, and it's now become support. I think from here, the move is only going to continue higher and grind away higher. So you could look at it as an opportunity to get in for the long term, and you can put your stop losses just under here and assume that momentum is going to continue for the US dollar strength, as their economy isn't looking too bad, and for now, there isn't an economy performing as good. So it makes complete perfect sense for the US dollar strength to continue grinding higher. Even though we just looked at the US dollar index, and the rally that it's had has been quite impressive, that's to say the least. But there's nothing stopping it from going higher. All right, that's it for this week. Good luck to everybody. Now, it's been quite a big week. I'm sure that many of you have made some good money, as trending markets is a great time to be making profits. However, just be careful and be aware. Don't hand any money back to the market. And until next week, trade well.